level 1 degree skeleton broke, and when that happens, we didn't know what we're supposed to do. Okay, I don't know how to go to the hospital. I don't know who to call. I don't know which doctor to see. I don't know anything at all. And because we had that insurance, everything was managed for us. Everything is from the point of accident all the way to the hospital, the procedure, everything managed by the insurance itself. All I have to do is stay next to my friend, and they come to me and ask me questions, and I answer only. Can? Okay, all right. Okay. So good afternoon, everyone. My name is Ivy, and I'm here today with my colleague, Ying. So we are insurance agents, insurance representative from Prudential, and we are also wealth advisors. And we started our own channel called the Financial Fitness Channel. So we have been invited today to share more about what exactly is insurance is about, and also how does insurance work. If you have any questions at all, you can feel free to write your questions in the comment box below, and we will read it all out later at the end of the session. Okay. So just an introduction of myself. Okay. So we are the one who founded this channel called the Financial Fitness Channel. Is actually a YouTube channel. I myself, I'm a Bachelor of Economics and Marketing from University of Sydney, and I joined the insurance and unit trust industry since 2013, and I've achieved my certificate of wealth planner since 2018. I'll be getting my certified financial planning certificate this year, and I personally have helped 400 clients with their personal finance. Ying here, she is a Bachelor of Commerce Finance from University of Queensland, and she joined the insurance and unit trust industry since 2016. She has achieved her certificate of wealth planner since 2018. She is also a member of Million Dollar Roundtable 2020. That means she handle high net worth clients. Okay. She has also assisted more than 300 clients with their personal finance. So a little bit more on our channel, because since you guys are here, I just wanted to introduce my channel to everyone. So ever since I came back from Australia, even though I studied in we call it a prestigious university, when I came back here and start my career in Malaysia, I realized that even though I graduated from a prestigious university, I have absolutely no knowledge to personal finance. I don't even know how does a saving account work, or how does a fixed deposit work. I don't even know how does a credit card work. And I noticed that this was not shared among students. You know, this is not something that we learn in school. And there is a lack of resource in Malaysia whereby people share this kind of knowledge. You cannot just learn it anywhere. And even when we have our parents or our teachers, I find it quite difficult to ask them about all these things, because I scared being judged. I scared they will say, wow, so something so easy, you also don't know. Okay. So we created this channel as an introduction to finances. So this channel, we covered things like how does crypto work, how does tax work, how whether should you invest in online investments, what is the difference between shares and unit trusts, and how does insurance work. So our channel is all about that. So if let's say you guys want to learn more about finances and how all this financial product work, you can feel free to go and visit our channel called the Financial Fitness Channel on YouTube, and subscribe for weekly videos. We post our videos on a weekly basis. This session, we will also upload this video in our YouTube channel on Sunday itself. Okay. So our main goal for the financial fitness is to help more Malaysians to be financially literate. Okay. So because we notice there are many people in Malaysia who have strong interest to learn how to better their finances, but they find that the financial world is very complicated. I myself also find it very complicated, even till today. And it is not easy to understand. This one is, don't think that you're dumb lah, okay? It's very common. It's a very general thing. Therefore, we created this platform to help make finance easy and simple to learn. So at this moment, we have around 6,000, closing to 7,000 subscribers already. Okay, if you want to join, you can feel free to scan this code. And we also have Facebook, also Instagram, and we post quite frequently on daily tips, on financial tips as well. All right. So before that, I just want to highlight what are the topics that we will talk about today. Give me a second. I shared the wrong video. Okay. Okay. All right. So today, we will talk about, Ying will highlight a topic on introduction to insurance and how to design your insurance plan, whereas I will talk more about why should you choose insurance and how does this new product called investment linked plan help you in your finances. So without further ado, I will invite Ying to come in and explain to you more about what exactly is insurance. Okay, Ying, I pass to you.
Hi everyone. Can you hear me? Can you guys hear me? Hello.
Yes.
Hannah? Okay. Just got to check. Nowadays with all this online, in case I've been talking, and no one can hear me. So let me just share my slide. But before I actually share, just curious. Is everyone here from psychology psychology course, or it's mixed? Just curious. You guys can share it at the comment chat box there while I share my slide. Okay. So everyone is from psychology. PR. Oh, okay. We have some from IT department and outsiders. Wow, okay. It's good to see there's a lot of mixture here, mixed courses here. Oh, outsider as well. Oh, okay. All right. So let's begin. Okay. Let's see. Sorry. Okay. So I think you need to off your sharing because off again. Mm-hmm. Oh, okay. Right. Sorry about that. Okay. Right. So what is insurance all about? All right. So insurance is actually a financial tool to actually help us against financial losses. So this is the textbook phrase lah. I got it from Investopedia. But basically it's trying to say that insurance is a contract represented by a policy in which an individual or an entity receive financial protection or reimbursement against losses from an insurance company. So the company will pool all the clients' risk together to make payments. So to make payments lah. It basically, in layman terms, it means that the insurance company will pay you when you face a financial loss. So, in what situation will we face financial losses? Most of the time is actually because of risk, right? Because something uncertain may happen and it may cause us to have financial losses. So, what kind of risk do we face every single day? It can be the risk of getting robbed, maybe just going out and suddenly someone just snatch your bag, or risk of getting accident, or risk of getting an illness, or risk of fire damage. Risk is a part of our daily life. So it doesn't mean that we shouldn't go out, it just means that we have to learn how to manage our risks, and so that we can minimize the chances of financial losses. So the best way to do this is actually through insurance. Of course, a lot of people actually they have told me before, Ala Ying, I can just be careful. I hold my bag like this, then I won't get robbed. Or I make sure I drive extra careful, then I won't meet an accident. Or I just need to eat healthy and exercise more, then I won't get an illness. But it's really uncertain, right? Maybe like you have experienced before, you are very, very careful and still accident happen to you. Maybe it's not your fault. Maybe someone else is making a mistake or someone else is being careless, but it affects you. And because of that, you face financial losses. So when this actually really happened, all your savings, like when an accident happened, you need to fix your car, you maybe have injury, so you will need to use all your savings, okay, your hard earned, maybe you guys work part-time, all your savings, all your money, you have to put it into fixing your car or actually like getting a treatment for your injury. So your savings will basically go down to zero. So that is actually what insurance is actually all about. It is actually to help you to protect against all these financial losses. So of course, it all depends on how precious you think this is to you. So if you think that never mind lah, getting robbed is fine, I can take the risk, so I don't need this. Yeah, it really depends on you. It's really different from each individual. But I would say that it is only a risk when it affects something that's precious to you. So it really comes down to how precious you think this is to you. So like the common precious things or like items in our life would be, I would say, our family. Okay, this is one of the common precious things in our life. High value items like our house. If you work so hard, you take up a mortgage, you take up a loan, and you finally got your dream house, and suddenly the neighbor's house got on fire, and your house, burned together with your neighbor. So, you feel so heartbroken that all your hard-earned money just go down to drain. So another thing is also very common is your future. Your future is very important, right? So all these are the common precious things, and this is because there are these common precious things that in our life. This is how insurance concept actually comes in. So many years ago, people have realized that when a family member passes away, many expenses can incur. So just want to ask you guys lah, since there is how many of you here? 37 of you here already. I just want to ask you guys, okay, when a family member pass away, what do you think, like what kind of expenses do you think would incur? Like funeral or what kind of expenses? Please comment it at the chat box. Hello. Funerals, yes. Other than that, can you guys think of any other expenses that might incur when someone actually passes away? Mostly only funeral. Okay, that's fine. So there is funeral. Funeral include like the ceremony, the burial services, the coffins, and so on. But other than that, it's actually the living expenses of the family member after that. Because if let's say the family has young children, like little kids, so they will have a lot more expenses, because if let's say the breadwinner of the family, like let's say the income earning member, like the parents passed away, then what about the children expenses? So all these are extra expenses that may incur, especially when a family member passed away, right? So people have realized this, and that's why they actually created insurance, so that when such an event actually happened, they can use insurance to actually make a payout to the family. So many years ago, okay, like I said, let's say there's this village ABC. Okay, they realized that, okay, since there is such a thing, like when a family member passed away, there's a lot of expenses and so on. We want to help, since all of us are in one village, right? So all the village members, they group together and they pool their money together and they put it in a piggy bank. Say lah, huh? They put it in a piggy bank. All right. So they know that if, let's say, one of the member passed away, okay, they will use the money inside this piggy bank to pay to the member's family member. So this is actually the concept of life insurance. That's the basic of life insurance, how it all started, right? So because of this concept, insurance companies actually come up, they adapt from this concept. They use this concept and they started building insurance companies to provide more coverage to other people, not only just village ABC, but to the whole country or to the whole world and so on. So that's how it actually comes to be. And from there, from life insurance, they actually expanded further to fire insurance, theft insurance, health insurance. So health insurance is very commonly known as medical card, right? Car insurance, if let's say you guys have cars, so most probably you know car insurance. And then there is critical illness insurance and so on. So there are many types of insurance out there, but the basic actually started with life insurance. So another thing that I would like to share as well is that a lot of people think insurance companies are charity, are like NGO, but the truth is insurance companies are profit earning companies. So they do take a profit from this, all right? So it is not a charity. When I first started out after I graduated, I was sharing this insurance to my friends, to my peers and everyone. So all of them said, huh? Insurance should be to help people, right? It should be like a charity and things like that. No, okay. Insurance company is a profit earning company. Okay, they are not for charity. So for them to provide us with the coverage, we do have to pay a premium. All right. So we call it an insurance premium, or for Takafu, they call it contribution. So from this insurance premium that we are actually paying, all right, it is actually to cover insurance charges, agent fees, administration fees, fund management fees, and so on. So this is how insurance actually earn their money lah. Okay, it's from the premium. So now that you know what is insurance, so why is it important for us to actually take it? All right, since they actually charge us, why do I still have to take insurance? Why can't I just save some money and then just use it for emergency? So why is it important to actually take up this insurance? So for this, I will actually pass it to Ivy. Ivy.
Thank you. So I will take over from here. Again, if any one of you have any questions, just feel free to comment it in the comment box. All right, and then we will answer the questions later on. Okay. Right. Okay, so I believe a lot of you would have a rough idea that or have a feeling that insurance is important. But let me just see how many of you do feel like that. Please tell me if you believe that insurance is important. Please comment 111 in the comment box. Okay, if you feel or you believe that insurance is important, can you please comment 111 in the box? Okay, a handful of you believe that insurance is important. Okay, good. All right, now we go a little bit more difficult. Okay, so why do you think insurance is important? Can you tell me your reasons? Can you just write like a brief reason why you think it's important? I don't know. I just, nobody got any reason. They just know that insurance is very important. Is it? Oh, no one has any reasons. Got buy, got insurance, financial security if anything happened. Okay, all right, okay, that's good. Winnie Chua, all right, Irving Chong, okay. Chong Lei Te says in case got accident, incident happen, then no money. Okay, okay, that's good, that's good. All right. So I believe that these are some of the things that people would know if let's say anything happened to us, like for example, if we get sick or if we have any accident, then insurance is supposed to be there to help us financially. Okay. And which group do you think, but if let's say if you say your reasons are like that, which group do you think needs insurance the most? Which group? Group 1, 0 to 12 when you're still a baby, or group 12, group 2, 12 to 18 where you're still children, or when you're student, high school student or university student, 19 to 24, or when you're already working, earning money already, only then you go and buy insurance, 25 to 50, or when you retire, 51 and above. Which group do you think? Okay, so Chong Lei Te says group 5. All right, group 5 is when you need the. Kelvin Go says group 4. Irving Chong says 1, 2, 3, 4, 5. Oh, okay, okay. Ching Wei Long says group 4. Sheng Eng All says group 4. Chen Xiu says group 4. That means I think a lot of you agree that once you earn money, you only buy the insurance. All right, okay, okay. Let me just show you the answer to our survey. Okay. We've done this survey before, all right, with a lot of people in society. And majority would agree that we need insurance at old age, okay? Because when we are at that age, we are at the highest risk, okay? We are at the highest risk. And so even without insurance, right, okay, imagine a world without insurance. If you agree that we will need to protect ourselves at old age, eventually you still need to save an amount of money, okay, for emergency fund for your medical care, even if insurance does not exist, okay? So insurance is just like saving. It's just that it is saving for your medical expenses when you are older. So insurance is just a tool to help you reach that goal easier. So let me just ask you, why do you think that insurance is the smartest choice for your financial planning? I'm going to share it with you. Actually, if you're somebody who likes to play with the calculator and calculate, it really does make sense that you should choose insurance if you're planning to save for an emergency fund. Okay, so if today you already agree that we will need to save for our medical care needs, okay? You need to save an emergency fund for your medical care needs. Where would you save that money? Imagine if you save your emergency fund in a saving account, okay? You put 100 ringgit in your saving account. 10 years later, you will have 12,000 ringgit as an emergency fund, okay? But today, if you put 100 ringgit in insurance, immediately you would have 1 million ringgit, and you can use this 1 million ringgit whole life if and when you have an emergency, because this 1 million ringgit is a group of funds from everybody. Okay, everybody chip in this money, 100 ringgit, into this group of funds, so that if any one of us happen to have an unfortunate event, this group of funds can help us. So it makes sense why everybody wants to buy insurance nowadays, because they know that maybe in their life they can never reach this amount. 10 years later, also 12,000 ringgit only if I put 100 ringgit. But if I put 100 ringgit in insurance right now, I can get 1 million for the whole life. Okay. So most of you agree that most of you want to buy insurance when you are only earning money. Okay, 25 to 50. So group 4 lah. All right. Okay. But actually, most of the agents that you meet outside, they would tell you to buy insurance as early as possible. And why is that? Okay, I'm going to highlight the why today. All right. So why buy insurance as early as possible? the first reason is because it is cheaper when you are young. Okay, we snapshot a quotation from our own system to show you. If let's say Mr. Tan at age 24, he buy a medical card, it only costs him 136 ringgit a month to buy an unlimited medical card. But if Mr. Tan waited until 60 years old, only then he buy a medical card, the monthly premium would have become 618 ringgit. So it is 6 times more expensive. And at this age, when he already retired, it's actually even harder for him to buy the insurance because he retired already and then he don't have any more working income. So it is actually much more affordable when you start your insurance early. Okay. And the second this one is more important. Then the second reason is insurance only accepts people who are healthy and have low job risk. Okay, low job risk here means if let's say for example you planning to work as a bomb disposal, you know, the one who you know, the ones that get rid of the bombs on okay, the chances of you getting insurance will be very, very low lah, almost impossible lah. Okay, but if you are working in an office environment, it's no problem. So we only accept people with low risk, okay, low risk of claiming, okay. And most of the time, the company would look at the person's health, okay. I just like to highlight that not everyone can buy insurance. Insurance is not something that like nasi lemak, you can just one day you feel like buying nasi lemak, you go and buy nasi lemak. It's not like that. Insurance have to go through application, have to go through examination. They check that you are okay, you have low job risk, you have low health risk, only then they can accept you. Okay, it's application based. So not everybody can buy insurance. Not because they cannot afford to, but because they have a health risk that's too high for the insurance company to accept them. And I believe Ying has previously mentioned, insurance is a group of funds, okay, where everybody chip in their money together to help whoever that needs it when unfortunate event happen. So it wouldn't be fair for the company who manage this fund to accept people who have high health risk, because we know that if let's say you have high chances of claiming, the funds will grow smaller and smaller. So when it's when it become very, very small, it wouldn't help people who really, really needs it. Okay. So the health risks are here. I show you a few examples. Okay. It doesn't have to be some of the health risk examples would be like, for example, overweight. Okay. Let's say like you are 165 centimeter but you are 100 kilo. So it's obvious that you are overweight. And statistically speaking, we know that if you are overweight or you're obese, you have a high chance of getting ill. For example, you have high chance of getting heart attack, kidney failure, or diabetes. And for people like this, we generally don't accept, the insurance company don't accept, or is subjected to many terms and conditions. And it doesn't really just about overweight. Even people who are born with illnesses, for example, like asthma. Let's say like when you are younger, you got asthma, and this asthma condition follow you until when you're adult. Even people like this who are born with such an illness, it's not their fault, but they also cannot buy insurance. So I just want to highlight this because it's just be grateful that if you have good health and you have the choice to buy insurance, don't let go of that opportunity. And sometimes I know being healthy is very subjective. Some people would tell me, hey, I only got gastric stomach ache why I cannot buy insurance? It's so something so minor. I'm healthy. I just got stomach ache. I just got gastric only. Okay. For minor illnesses like gastric, statistically speaking, gastric is a condition where it is repetitive. That means when you have gastric today, the company has foresee that you have a high chance of getting gastric again. So if you're going to get gastric again, that means it's a repeated illness that can be claimed under insurance. So the company may still offer you insurance, but they will exclude gastric. That means they say, okay, I let you buy the medical card, but in the future, if you get gastric, we won't cover you for that gastric. So we call this exclusion. So even things like this can happen as well. That's why we always tell our clients, if can, you buy insurance as early as possible when you have no such condition at all. And you don't want to wait until when you have serious illnesses, like, for example, diabetes, heart attack, cancer, because these are some of the conditions where it is not only have high chance of going to the hospital, but also life-threatening. So the more serious illness you have, the higher your rejection chances will be. And we hope this will never happen to anyone here, because like Ying has mentioned, insurance company is not a charity organization. We are not NGO. It's a business. Okay. So we do face people who thinks like when they meet an unfortunate event, like when they are at the hospital, they expect insurance to come in and help them. It's not like that. It's not like that. It's a financial product that you have to go out there and buy yourself one. Okay. We have people who call up us, from the hospital where they are already at the surgery room, and they just say that, I want to buy insurance because I'm going for a brain surgery right now. Can I apply the insurance right now? Don't be surprised. It does happen. It really does happen. And it does not just happen one time. We get this yearly. So there is still people out there who thinks that they can buy insurance anytime, anywhere. And this is definitely not true. Not true. So I hope after this session, you know that insurance is when you are still healthy and you have low job risk, you can apply. But when anything happened to you already, like you got a certain condition already or illness already, you cannot apply. Or you will be subjected to loading, which is higher price or exclusion. Okay. So next, I'd like to tell you what exactly is investment linked plan and how does it help you in your financial planning. Okay. Investment linked plans are fairly new in the market, about 20 years back. Okay. During our parents' time, if your parents is already like 50 or 60 years old, during their time, they don't have investment linked plans. They only got traditional plans where there is no saving one. So investment linked plans, at a glance, is basically it's a product with insurance and investment together. So how does it work? Basically, the premium you pay minus the insurance cost, whatever balance, we will use it for investment. Okay, we will use it for investment. And this cash value, okay, this cash value is what they so-called savings. Okay, all right. So this is how it works. So if you pay 100 ringgit today, if your insurance cost is 30 ringgit, so 70 ringgit goes to investment, and then the company will help you invest this 70 ringgit as your cash value, as your saving fund. And we always recommend that this cash value is used for retirement savings, it's used as emergency savings. Because why? We don't recommend people to take out this money anytime they want. They can, but we don't recommend so, because actually the amount also not that much. And then on top of that, you need this cash value to counter medical inflation. Okay, why is that? All right. First of all, you need to know in this equation, insurance cost here is not guaranteed. Okay, for example, today you pay 100 ringgit, insurance cost here is 30 ringgit. This is only for this year cost. Next year, when you grow older, this cost can increase on. This is the same for every company out there. Okay, and this cost not only will increase by age, this cost will also increase according to inflation. Today, nasi lemak costs 3 ringgit. 10 years later, nasi lemak can cost 20 ringgit. So this investment portion is to help us counter whatever increment or the inflation here. Okay, I hope I try to make it as layman as possible. But if you still don't understand, feel free to type your questions in the comment box. Okay, so In the older days where traditional, there is only traditional plans, okay, nowadays it's called non-investment link or standalone medical. Basically, whatever premium you pay minus insurance cost, there is no cash value. So if you pay 100 ringgit, the insurance cost is 100 ringgit, then it's zero cash value. There's no saving at all. So investment link now, as I showed you earlier, so if let's say the premium is 100 ringgit and then the insurance cost is 30 ringgit, we got add in some investment for you. Okay, so this is how it works. And so insurance cost for both sides is still increasing one. Okay, it's still increasing one. All right. So if a lot of people would choose investment link nowadays is because traditional plans, the premium goes up when the insurance cost goes up. And people don't like that. People want to pay forever 100 ringgit. Of course, I myself, I also prefer to pay 100 ringgit all the time. Okay, I don't want my premium to keep on rising. Okay, very tough already. Salary is not going up. Okay, so here we try to use the investment portion, okay, to counter the rising insurance costs, and then so that the premium can remain the same, and at the same time we still got cash value so that we have some savings for ourselves. That's why investment link is a very popular option, not only because of its features, okay, it also helps us counter the medical inflation and also provide us the additional savings for our future. But investment link is just one of the features of the product lah. Okay, I don't want I don't want all of you to think that, oh, I want to buy insurance because I want to save money. You can, but ultimately insurance is for protection. Okay, for protection. The main idea, the basic idea of insurance is always for protection. Okay, and in order for you to know what coverage suits you best, okay, if you want to know what is the best plan out there, Ying will show us how to customize a plan that best serve your needs. Okay, I pass to you, Ying.
Okay, so how is it so far? Going through the health risk, the diabetes, heart attack, and so on. Then go to investment. Anyone needs a break? uh, anyone needs a break here, or shall we take a 5 to 10 minutes break? 10 minutes break. What do you think, Calvin?
Yeah, sure. We can take a 5 or 10 minutes break.
So maybe we come back at 1:50. 1:50. Is it okay? Great. Okay. So I'll see you guys at 1:50. 1:55 lah. 1:50. 1:50. Okay, is everyone back? If you're back, type 111 in the chat box just to know that you guys are back. Okay, welcome back. Okay, only 3% back. What happened to the others? Okay. I can see you guys already. Okay. Okay, let me share my slide. All right. Okay, so I'm gonna share what is the best plan for you. Okay. Can I show? So what's the best plan? Right. Okay, everyone's back. So this is the most common question a lot of my clients will ask me. You just recommend me the best plan. I want the best plan. Okay, so I will always counter them and ask them, what's the best plan actually? I mean, what's the best plan to you, right? Because in the end, there is no one plan fits all actually, right? Because like today, I really like eat nasi lemak, but I prefer chicken rice. So it's like there's no one meal that fits that everyone would like. That there's no one meal that everyone would prefer. So actually same goes to plants as well. There is one man's meat is another man's poison. I always use this phrase because it like something that may be precious to you or may be good for you may be another person's poison, right? So in the end, and another factor is that it's just like cars as well. Like there is Toyota, there is Honda, and there is BMW, right? Some people may prefer BMW, but what about the affordability in terms of financially? Like if today I'm a fresh grad, I'm only earning 3,000 a month. I like BMW. BMW is very good. I feel so comfortable, leather seats, sporty look and everything. But can I afford it or not? That's another thing, right? So, or what about Toyota? What about Honda? So there is no such thing as the best plan or the best car, right? It's all depend on the personal preference. Okay? So nowadays, a lot of plans out there, they are customizable, right? But you can include a lot of things in an insurance plan. You can include like just now Ivy say savings, or there is also like coverages like death, critical illness, disability. There's also what's that called, a waiver. There's actually a lot of benefits that you can add in an insurance plan. But the basic is death, critical illness, disability, and medical or health, which is the medical card or hospitalization benefit. So these four are the main basics that would be included in a plan that everyone would usually ask for. So what's the difference? Okay, what's the difference, right? So for death, critical illness, and disability, these are more for income replacement. And medical or health, it's actually to counter your medical bills. So a lot of people get a little bit confused here, right? So if for medical or health, it's actually the medical card, the hospitalization bills. Meaning to say that today, if I have this benefit in my insurance plan, if I admit to hospital, all my admission bills, my treatment bills will be covered by my insurance company, right? But what about critical illness benefit? Okay, if today I include also critical illness benefit into my plan, I would have income replacement. This would mean that the insurance company will pay out a lump sum amount of cash to me. So these are the difference. One is you get cash. Another one is hospital getting the cash. Hospital getting the cash would be the medical card, which is the one that's going to pay for your medical bills. Critical illness will be the one that you getting cash, right? Because it's an income replacement. Same goes as disability, all right, and also death. So some may ask me, Ling, I die already. No one's going, I won't get the cash. Yes. So your family member will be the one who's getting the cash, right? So these are actually income replacement and medical card. So these are the general one that most of the people would actually include in their plan. But if let's say today my budget is limited, maybe I just include the medical or health benefit in my plan and I don't include the rest. It's really up to you, right? So, but if let's say today I have a critical illness, one of the common critical illness that that's in Malaysia, I would say is cancer, heart attack, stroke. So all these are very, very common, right? So if let's say today I have the medical or health benefit in my insurance plan, but I don't have the critical illness benefit, does it mean that if I diagnose with cancer, it won't be covered? Not really. It just means that your medical bills will be covered because you have the medical benefit in your plan, but you won't get any cash from the critical illness benefit. So you won't get a lump sum payout from there. Okay, so disability is disability like OKU, so maybe like coma. So for coma, you need a very long-term income replacement because if today I have coma, I may sleep for 10 years, 20 years. So I will need maybe I will need private nursing. Maybe my family will need to find private nursing for me, or maybe I will need some, the life support, or maybe I need the oxygen, or I need a special bed. So I do have like clients who have heart failure. So their heart is only functioning about 25%. So doctor actually asked them to actually go back home and rest. So your house may not have the equipment to actually allow you to rest at home. So you will have to purchase all those like a special bed, a bed that can elevate, or maybe like the oxygen tank. You will need a lot more health equipment. So all these are actually additional expenses that you will need. So you can actually use the income replacement, the payout that the insurance company gives to you to actually pay for all these expenses, because the medical card can only cover the medical bills. But let me go in slightly further. Let me give you an example. So let's say Jane, she's 30 years old. She's starting to build up her career. She owns a car, she owns a house, her parents are retired, so she's taking care of her parents as well. So if just from looking at this, right, you can actually guess roughly what expenses or what kind of commitment Jane would have already. So for example, if she has a car, she'll most probably have car loan. If she has a house, she most probably have housing loan. And since her parents are retired, she'll have to give like home allowance. Maybe she have to help out at the housing expenses. All right. And since she's just 30 years old, maybe she's just starting to earn quite good income. All right, building up her career. So from here, what kind of coverage do you think Jane would need? So this is actually what we do, what insurance agent and what financial or wealth planner we do. Okay, we actually look into our client's profile, and from there we will actually help or maybe adjust what kind of coverage and like fine tune the coverage with them. Okay, so if let's say today Jane actually diagnosed with cancer, okay, very unfortunate. Okay, Jane got diagnosed with cancer. All right. So what kind of financial losses do you think Jane will face? Like if let's say someone is, sick and they got cancer, what kind of expenses or additional expenses that she will face? Can you guys comment it at the chat box? Is everyone still here? Okay, still here. Right. Okay, medical, income, okay. Medical fees, income loss, right? Job loss. Thank you, Ivy. But I was hoping more from the participants. Anything else you guys can think of? Actually, just now I mentioned a few, right? So like if let's say someone is diagnosed with an illness, their house may not be suitable for their illness. So they may need house renovation. They may need to buy more supplements or vitamins. So all these are actually additional expenses that previously Jane does not need to incur, right? Because previously she's very healthy, she don't need to pay for all this, but because of this illness, she have to incur all these additional expenses. So cancer is one of it. I have a client who actually met an accident, so he became disabled, but he stays in a 2-story building. So in his house there's stairs and everything. So how do you think he's going to climb the stairs every day? So he have to actually build like a slope, all right, so that his family member can push him on a wheelchair. And also he have to renovate the room downstairs so that maybe he can sleep downstairs. So all these are additional expenses that actually someone would actually incur when unexpected things like this were to happen. So let's see. Okay. So like what you guys mentioned just now, okay, medical bills, hospital bills, take-home medication, supplements, vitamins, okay, all these are actually additional expenses that someone would incur. And yes, most importantly is the ability to earn income. Because today, if let's say you're diagnosed with cancer, it's very realistic that your boss may not want to hire you anymore because you'll be in and out of the hospital. So the boss may feel that, hey, I think it's better for you to rest at home. So you don't have to come in to work anymore. So it's very realistic, but it's really true lah. It's happening in this world to a lot of people, and it's really real. So the basically the income loss is actually something that is really, I would say, is most of the people's deepest fear lah. Okay, so how much Jane would actually need? Actually, this is just a very basic profile. Okay, of course we will have to look a lot deeper, like how much loan does she have, like in amount, like how much in detail. But we do have a rule of thumb. Okay, we do have a rule of thumb. Okay, the rule of thumb is for critical illness is 3 to 5 times of her annual income. Okay, for medical, it's recommended 300,000 per year. The coverage to be 300,000 per year, because like for cancer nowadays, the medical bills is depending on the cancer as well. It can go up to maybe 200, 300,000, including with all the medication, treatments, the chemo, therapy, and so on, all the radiotherapy and so on. So what about the additional supplements? And some of my clients, they do change their diets, like they eat more organic food, and organic food are not cheap. So all these are additional things. Okay. Then for disability, we would usually recommend a lot higher, 10 times of the annual income, or for death, it's 10 times of annual income as well. So I know like a lot of singles out there, or let's say you're not married yet, most probably you won't look at so much on the death part, but the disability part. Because if today you are starting to earn an income, you just come out from university and you want to earn an income, okay, if disability actually happens, okay, you can take a very long time to actually recover from that. Okay, so that's why we would usually recommend 10 times of annual income. Okay. So go back to Jane's case. Just now we were talking about cancer, right? The big C. We always say the big C, cancer, right? The reason why we would recommend for critical illness to be 3 to 5 times of her annual income is because first year, most probably Jane will be going through treatments, right? So in and out of hospital, going through chemo, going through radiotherapy and all that. Okay. Second year, she'll most probably still receiving treatments, or maybe recovery. Okay, in recovery. All right. Third year, maybe okay, she can start to look for a job already. Okay. Then fourth year, maybe getting stable, because you have to understand that once you are an ex-cancer patient, the HR or the boss may look at you differently, right? Because they may see that, okay, you are an ex-cancer patient, so maybe you need more medical care. Maybe you need more leaves, okay? Maybe you need to take more leave. Maybe you need more rest, okay? You cannot take too much stress. So all these things the boss may actually look into. So they may not pay a very high income to Jane anymore. Maybe Jane previously she's earning 10,000 a month, let's say. So after getting cancer, she start looking a job again, maybe she can only get 2,500, 3,000. Okay. And that's actually, I think, is quite good also if she can get 2,500, 3,000. But a lot of time she would actually really struggle to look for a new job. So getting stable on the 4th year and 5th year, finally, adjusting with the new income that she's having. So it's 5 years loss of income. Okay, from 10,000 income, maybe it dropped all the way. Okay, to maybe like 2,000, 3,000. So you need time to actually readjust yourself financially. And this is provided that the illness doesn't relapse, right? So like cancer, sometimes you may be cancer free for 1 year, and then 2nd year it may come back again. So you need a longer time to actually readjust financially. So that's why for cancer, minimum we recommend 3 years. Best is 5 years. But in the end, it also depends on the affordability, whether for this amount of coverage, whether it's comfortable for you financially. Because if today you ask me how much is enough, I would actually say it's never going to be enough. Because if today someone is going to compensate me for my income ability loss, I would most probably tell them that you can pay me millions, because it's not going to be enough, because my lifestyle is not going to be the same anymore, right? Because I'm already an ex-cancer patient, or let's say today I disabled already. Life is never going to be the same. So it's never going to be enough. But can I actually afford for such a high coverage, right? Can I actually, like, if let's say today I want 2 million coverage, I hope that if let's say I got cancer, let's say, okay, let's not curse, okay, ourselves, but just let's say lah, okay, let's say cancer, then I hope that I can have 2 million, but the premium may be very high, maybe it's out of my affordability. So from there we actually adjust. So maybe 5 times of annual income critical illness I may not be able to afford, but even you can get like 1-2 times of your annual income, is actually really good. It's better than nothing, because when you have an illness, nothing can provide you with that instant lump sum amount of cash other than insurance. Because today, if let's say you have illness, you can ask for money. You can, do posters and actually borrow money from your friends, but it would be difficult. No one would give you a lump sum amount of money without asking much questions. Only insurance can do so. So that's why it's better to have some than to have nothing at all, right? So just a second. So far, am I going too fast? You guys have any questions? You guys can just actually put in at the chat box. Okay. Okay. Right. So any question? Are you guys still here with me? Can you guys type 222 if you guys are still here? Okay. Okay, very good. All right. So another thing that I would like to mention is there is a lot of confusion between the what medical card actually covers. So remember just now that we were actually saying on the lifestyle change, the supplements and the vitamins and income loss. So all these are actually not covered by the medical card, which is the hospitalization benefit. The hospitalization benefit can only cover you in terms of hospital bills and also take-home medication. Anything other than that, medical card will not be able to support you from there. So insurance is, I would say, it's not 100% perfect. It does help you. Remember, what we are doing here is to minimize our risk of financial loss. Is to minimize, not to eliminate, because it's very, very difficult to eliminate the risk, but it is possible to still use financial tools to actually minimize them. So this is how we actually use these financial tools to actually minimize it. So like medical card helps us with our hospital bills, our take-home medication. But in terms of supplements, vitamins, lifestyle change, income loss, all this, it would have to come from the critical illness benefit, because critical illness benefit, the insurance company will pay you lump sum, let's say 500,000. They just pay you lump sum 500,000, no questions asked. Okay, how you want to use that money is purely up to you. Okay, you want to use it for supplements also can, lifestyle change also can. All right, so some of my clients would say that, oh, okay, I got the 500,000. I don't want to go through the treatment lah. It's too torturing already. I just want to travel the world. I use that money and I travel the world, around the world and enjoy my life. And then I'll just, let my health take me where I go lah. Okay, so it's really up to you. It's very subjective. Okay, so I think that's about it. Do you guys have any questions for me or Ivy? You guys have any questions for me and Ivy?
I'm sure they are just typing very long question. But before we go into the questions, which I believe many of you would have lah. All right, I just share a personal experience of mine. I didn't think much about insurance as well. When I graduated from University of Sydney, but this all changed when I graduated from University of Sydney. I went on a graduation trip with my friend to Bali, and we went for whitewater rafting. And we just planned for the trip. We went on vacation, we went on a holiday, we just went for the trip. We didn't think much of it. And we didn't buy travel insurance. Okay, we decided to save that money and we did not buy any travel insurance. So when we went for the whitewater rafting, the whitewater rafting organizer said that it is compulsory for us to buy a personal accident cover before we go for the whitewater rafting activity. So we are basically forced to buy lah. Okay, I didn't think much of it since they say it's compulsory, so I just pay. All right, and something really did happen. So during the whitewater rafting trip, during one of the waterfalls, the whitewater rafting, the boat fall into the river. My friend broke her back. Okay, so it's a level 1 degree skeleton broke, and when that happens, we didn't know what we're supposed to do. Okay, I don't know how to go to the hospital. I don't know who to call. I don't know which doctor to see. I don't know anything at all. And because we had that insurance, everything was managed for us. Everything is from the point of accident all the way to the hospital, the procedure, everything managed by the insurance itself. All I have to do is stay next to my friend and they come to me and ask me questions and I answer only. So I realized that when you have money, okay, when you have money and or you have insurance, a lot of things can become easier. Imagine if, let's say, I did not buy insurance back then, I didn't buy the personal accident insurance back then, I would be at a loss lah. I really, seriously, we were in the middle of the woods. We didn't know what to do. We seriously don't know what to do. And when I was in the hospital, all I can think about is my friend's condition. I was crying. I really very worried. What if she cannot walk anymore? All these things. And I was in no mood to talk about money. But the reality is like when you're at the hospital, before they give you treatment, they do ask for money first. And I've seen it many times. If let's say you don't have money, you don't have insurance, the doctors and the nurse will not hesitate to shove you aside. They will not hesitate to shove you aside. They will ask you, oh, there is a spare bed there, you can lie down there, but nobody's going to help you. It's a cruel world. So at that point, I realized like, oh, I need to somehow learn all about this. I need to somehow learn if anything happened to me, if I got an emergency, if I face an emergency, what should I do? This is like part of the survival skills that we must have before we come out to society or when we are about to go out to society. So this is just my personal experience. And if I see there is a question here, if nothing happens to me, do I still get my money back? You want to answer this?
Oh, yes. So this is the number one most common question. Okay. So remember Ivy shared about the investment link. Let me just go back to that slide. Okay. So I know youngsters nowadays, you guys YOLO all the way, right? So that's what I do as well. So sometimes. Okay. So a lot of people would say that, hey, this won't happen to me, and every month I'm paying this much. Do I get my money back? So unfortunately, even if nothing happens to you, the coverage is still given to you, correct? During that period of time. It's just like today, I believe all of you, your house or your car, you have a lock, right? You have a door, you have a lock, right? If throughout like 10 years living in that house or like 20 years living in that house, no one actually break in before. No one actually came in and steal something or actually harm you guys. Okay. Would you actually call the technician or the contractor and say that, hey, actually I don't need all this door lah. You can just take it away. The locks I also don't need actually. Because no one is gonna come in. Will you actually say that? But because the thing is we don't know, it's uncertainty, right? Today, if we close the door, if we didn't lock it, we will feel very, very, insecure. We feel that, oh my God, did I lock the door? Did I lock the door? You think twice, and you'll be thinking, oh, you go check whether you actually did lock the door or not. It's that security that insurance actually gives us. So for whether you can get your money back if nothing actually happens to you, you do get some, but it won't be equivalent to what you have paid. Sometimes, most of the time, you won't be able to break even, and you will basically get back lesser, much lesser than what you have paid all this time. Correct. So it's because of the coverage. It's already given to you during that period of time. So same concept as the just now, like I said, the door, the lock. You won't actually call the locksmith and say, can you refund all my money to me? Or the lock is useless one. No one is going to break in. Can you give me back my money? I mean, you won't actually go and tell the locksmith that, right? So it's similar to this as well. So you won't, the insurance company won't give you back all your money just because nothing has happened, because the coverage is given throughout that period of time. I hope I answered your question. All right. There is another question here. Is there like a time frame for us to claim insurance if we have a minor accident? For example, I fractured my ankle and we have to go to the hospital to check the fracture within the first 24 hours. Okay, so okay, it depends when you buy the insurance as well. But for accident, good thing about accidents is it is always immediate coverage for accident, because accident is very uncertain, right? I don't know whether I'm going to have an accident tomorrow or not. So that's why for waiting period on accidents is usually 0. It's usually if today my application for insurance approved, my coverage starts immediately. If tomorrow I face an accident, I'll be able to actually claim it. I fractured my ankle and we have to go to check the fracture within the first 24 hours. This, you will have to refer your policy, the benefit of your policy. But most of the time, it starts immediately. And even if you seek the doctors,
I think what he is asking is, at the point of the accident, do I have to immediately get it checked so to claim?
It depends on your policy actually. There are some benefits that have restriction whereby you will have to get it checked within the first 24 hours. But there are benefits whereby they allow you to check maybe even 24 hours later. So it really depends on the policy's terms and conditions. That is something that you have to really read through when you actually sign up for a policy. So I hope I answered that question. Shen Ern. Okay, Shen.
So let me just say something else about the your Shen Ern's question. Yeah, okay. So generally based on our experience, if you only usually if you buy a personal accident, you are not limited to the 24 hours. Older policies who only have medical card, they are limited to 24 hours. But personal accident policies nowadays, they are not limited to 24 hours. That's why when you buy an insurance, right, it's very important that you engage with an experienced insurance agent who knows about all these claims and also how to uh, customize your policy according to your needs. Okay, that's why it's very the difference between new agents and experienced agents. That's the difference. They will know in what circumstances you can claim, you cannot claim. So I hope if you want to know more about it, you can uh, privately message us for more information. Okay, I think I'll take the next one. Yue Xuan Chua says, if my mother already bought me insurance, do I need to buy another one myself? Okay, this one is depends. Depends. Okay. My advice is if your mother buy you insurance already, don't just let your mother handle everything. You still need to take the time to understand what is this insurance is about, because they buy this insurance for you, just like when your mother buy the car for you. You are the one who's using the car, you are the one who's going to drive the car, you are the one who's going to take care of the car. So it's the same thing. If your mother buy you the insurance, then you must at least get to know what is this insurance that your mother bought for you. At least go and do that. If you feel your mother's choice, okay, your mother may have bought the insurance for you, you may have a different opinion about her choice. Just for example, my father bought me my father bought me a Myvi car. Okay. He buy the medium spec one. I tell him actually I just need the basic spec. His opinion and my opinion may be different. Okay. So never put your level the same as your mother's level. Okay. Even if they are your mother, your father, your uncle, your auntie, everybody's opinion is different. So at least go and get to know what does that policy have first, and then only decide whether you still need to buy another insurance or not. Okay. Next one we have, I know COVID-19 is a pandemic. Shinro Te says, I know COVID-19 is a pandemic. Why some insurance company allow for claim? Very good question. Very good question. Okay. Nowadays, a lot of the new policies, a lot of the new product, okay, we actually don't cover COVID. We don't cover COVID. For example, because COVID is a communal disease. Communal disease. That means inside the community, it spreads along the community, all right, at a large range. Okay. For example, if you've seen Train to Busan or zombie movie, apocalypse, okay, when that happens, everybody is infected, right? You cannot claim insurance on. You cannot claim insurance. This is what we call communal disease. Okay. Even for cases such as if Malaysia happen to have war with China, okay, if we have war, war also we cannot cover one because it's a large scale. Okay. But as we progress, the government has taken good care of managing the situation, keeping the case low as we progresses. The company has made a special condition. Okay, only for these times they allow insurance to help claim COVID. Okay, only for this special condition. Okay, it's not like some company can do it. If you buy this product, you can claim insurance. It's not like that. Okay, it really depends on whether the company decides they want to cover or not. So at this moment, a lot of them, a lot of the companies out there, insurance companies out there, has allowed for people to claim COVID for their under their insurance. I hope I answered that.
Yeah, actually, it's an act of goodwill actually from the insurance company. It's really an act of goodwill because in the end, remember how we pool all our money together? The insurance company is in charge to actually manage that pool of funds. If they don't be careful, they just just let everyone just simply claim. Okay, that fund will deplete very 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 fast. And how are they going to answer to all of us? Okay, what about if next time we have new claims coming in, like maybe like we don't have COVID, but like you have already exhausted the fund for all the COVID patients out there. So what about us next time? So the insurance company have to be very very careful whether they are able to manage the fund to actually cope with this these expenses or not, this insurance cost or not. And right now, many of the companies, out of goodwill, even though in the exclusion clause it does say that acute communal disease is not covered, out of goodwill, the insurance company has allowed claims. Okay, most of the insurance companies have. So, okay. Okay, Sinro, I hope I answered your question. Yuan as well. So, do you guys have any other questions? Are there other exclusions like injury from skydiving? Okay. So from skydiving, right? Skydiving is an extreme sport. So under the exclusion list, extreme sports are a no-no, are not covered under the exclusion list. So unless there is usually that's why when you go for skydiving, bungee jumping, all these extreme sports, right? They will ask you to sign a very, very interesting document one. They will say that, okay, if let's say you suffer injury from this, it's not liable to the company. So like they would actually state all this because the risk is still there. And all these extreme sports, it would be under the exclusion. And another thing is, it's because we know the risk and we did it out of knowing the risk. So if, for example, if today I decide to suicide, let's say, if today I decide to suicide, okay, but I didn't die. Okay, I didn't die, but instead I harm myself. Okay, I became disabled. I need medical attention. Okay, so this is considered as self-harming. So self-harming is not covered under the insurance because it's in a way it's kind of like exploiting the insurance fund because like I just harm myself and then immediately I can claim the insurance. So all this is actually under the exclusion, right? So I hope
So
that
you can actually find the exclusion list in every medical brochure out there. So when you buy a medical plan, right, you go to the company website, they have a brochure. It is required by Bank Negara, where at the end of the brochure, they must list out a exclusion list. The exclusion list is generally almost the same for every other company one. It's practically 99% the same. So if you really want to know what is not covered under a medical card or under your policy, the exclusion list itself, it will be stated there. Uh, Common things are like, for example, if you do illegal things. For example, right, if let's say you drive without a license, it's very common out there. If you drive without a license, it's a illegal offense. Okay, it's an illegal offense. And if let's say if you're underage, you drive motor, very common also, and you happen to have an accident, insurance cannot claim because this is illegal. Okay, the law is the one who states that if you do anything illegal, even insurance cannot help you. All right, even if insurance cannot help you. So I would highly recommend, if you can go through any of the medical card brochure, or you can go to our website or our Instagram. We actually list down 10 things that people don't usually notice when buying insurance one. Just go there and download our list, and you'll notice a lot of things. So I hope we answered that question. Another thing is Irving Chong asks, how would you suggest a person to buy an insurance plan based on their income? Okay, when you start out in the society, I know all of you are fresh graduates. You will start out with the basic income, maybe like 2,000, 2,500. Not much lah, okay, not much. But you still can buy insurance because insurance can be as affordable as 100 ringgit a month, even cheaper than your telephone bill. Yeah, even cheaper than your telephone bill. So my suggestion is, if you cannot afford to buy all the benefits, okay, if you cannot afford to buy all the benefits, then at least get the medical card first. At least get the medical card first, so that if anything happened to you, you got a card to pay for your hospital bills. Okay, that is one of the most important thing you must have. The second thing is, if you can afford a little bit more, like if your budget is around 150 ringgit to 250 ringgit, okay, then you include all the benefits. What all the benefits means you must include life, critical illness, accident, medical card waiver. Okay, life, critical illness, accident, medical card waiver. All right, the amount don't have to be big. The amount don't have to be big. All right, if you have more budget, you can add more amount. But if your budget is small, you don't have to add very big amount. But at least include all five. At least include all five. Why? Because you don't know what's going to happen to you. You could happen to have an accident. You could happen to have a critical illness. You could happen to have total permanent disability. Okay, we don't know what's going to happen to you. So we do not want to just not include this benefit, assuming that you won't claim it. I have seen people coming to me, okay? I got customers that come to me. He said, I don't need medical card. I don't need life. I don't need critical illness because I already foresee. I fortune telling, I foresee I will die by accident. He 100% he tell me, I know I will sure die from accident. If you are a fortune teller, you know you sure die by accident, you only will have accident, then go ahead, you go and buy accident only. But if you are not fortune teller, like a lot of us, we are not fortune teller, then buy all the benefits. Okay, no need such a big amount, but at least include all the benefits. All right, that is a wiser choice. Wiser choice. I hope that answer your question, Irvin Chong. Okay.
So just now we were talking about the exclusions, right? So remember I mentioned that accident is immediate, but I just want to add another thing is that only accidents are immediate. Any other like illnesses, usually we call it like specific illnesses, we call it. So like cancer or this, there is a waiting period of 120 days. The reason why is because there are some people who when you apply for insurance, you need to do a health declaration. Okay, you need to declare that your health is all okay, it's good, and things like that. But there are people who may choose to not declare. They may already know that they have some illnesses, then they immediately buy the insurance and claim the next day, something like that. So the waiting period exists is because the insurance companies want to avoid all this. So like for illnesses, okay, there is a waiting period, and usually the waiting period will be 120 days. Okay, these are for illnesses, but for accidents, then usually there is none. It's really just unexpected. Okay, I thought dead body should be post-mortem if die by accident. Yeah. Yes. Yes, it is. Yeah. Okay.
Usually those, regardless whether you die by accident or you die by critical illness, okay, a basic post-mortem is necessary because the doctor will need to know how this person passed away. For example, we have a case whereby this person, he happened to have an heart attack, and then at the same time when he had the heart attack, he had an accident because he lost control of his bike. He was cycling. So when he was cycling, mountain biking, he had a heart attack, and then he fall down from the bike, and then he died. Okay, so is the heart attack that killed him, or is the accident that killed him? Very important question. Very important question. Because if let's say the accident is the one who killed him, he can get more payout. His family can get more payout. But if the heart attack is the one that killed him, he get less payout. Maybe because his policy has less critical illness. I don't know. All right. So a basic post-mortem will be required. And this is only determined by the doctor and also determined by the police report. All right. Yi Kwan Chiu asks, I wonder how the investment works in investment-linked plans. So the investment in investment-linked plans, okay, they are unit trusts, okay, which is a whole category or a new subject to talk about. All right. But unit trust is a group of funds where the fund manager will invest this group of funds into the share market. Okay. It's like you buying shares directly from the share market, but you put in money to these funds. A fund manager will help you manage these funds, okay, together and put it in the share market, right? So investment link uses unit trust. Okay, so unit trust got many kinds of funds, and inside the investment link plans, we will also give you options. For example, from the highest risk like China funds, like you want to invest in China technology, so it will be stated there, like I want 100% my funds in China funds, or I want to only invest in blue chip funds. So blue chip funds is like established companies, for example, DNB, Maybank, Public Bank, Top Glove. So all these are blue chip funds. So whatever funds that you want to choose, you can choose when you buy the insurance. The insurance agent will ask you, okay, how you want to select your funds, and they will tell you what and how and why. All right. But if you want to know more about unit trust plans and how investment works, you can actually go to our YouTube channel. We have done many videos highlighting about how unit trust works, what are bonds, what are equities, what are managed funds, how does fixed deposit works, which one is better, which one is not better, which risk can you accept, which risk can you not accept. So go and check there, and if you want to know more about it lah. Okay, you're welcome. So you can actually scan this code, okay? You can actually scan this QR code. It will bring you to our YouTube channel, but you can also go to the financial fitness channel in Instagram. As we have mentioned before, we have a link there. That we include all the ebooks that we have created. It's free. It's all free. And if you want to learn more about the top 10 products that can help you grow your money, and or the top 10 things that people mostly don't know about their insurance. So we have highlighted all the tips and also the financial advices in that in all the ebooks. So feel free to go there and then just follow us. Do show us your support if you want to grow financially. If let's say there is nothing else, shall we pass it back to Kelvin? Yeah.
Okay. Thank you everyone for attending today, and especially Miss Liu and Miss Ivy for taking their time to join us and sharing with us today. I hope all of you have benefited from this talk today. And for more information, please do not hesitate to check out their YouTube channel, the Financial Fitness channel. This session will be uploaded there as well. And their Facebook page and Instagram page is also available to reach out for more inquiry. And thank you again for being with us here today. Take care, everyone, and goodbye. For UTAR students, please remember to sign the checkout form that is in the chat box. And that is all for today. Thank you, everyone. Goodbye.
Thank you, everyone. Bye. Thank you, Kevin, for inviting. Thank you.
Thank you.